Hi, so today I want to show you guys a cool demo of this new speech-to-text functionality that I'm working on as part of our platform. So basically we want to make it really easy for anyone to construct a diversified portfolio or get some ideas for some stocks that they might want to invest into. And we want to use natural language to make sure that people can kind of talk about what they're looking for, what kind of stage they are in their life, and hopefully get a model portfolio that can fit their needs. So things that you would typically answer in sort of an investment survey or your sort of suitability test would be things like your income level, maybe your time horizon, maybe your risk appetite or risk tolerance, and whether or not you'd want to invest in companies that were located overseas, international companies, or just domestic companies. So there's a standard survey or kind of questionnaire that potential investors will be presented when they are, visiting or talking to an asset management company, and this survey is designed to inform the asset manager, how to best serve you and to offer you a portfolio that meets your needs and your individual circumstances. So to kind of help with this onboarding, we want to make it really easy for you to just use natural language and to have basically a conversation, if you will, with the chatbot, and to help you determine kind of like what is your perfect match that would meet your short, medium, and long-term goals. So let me show you how this could work. I'm going to do a very simple example, and please be reminded again that I'm not a registered financial advisor. This is not considered financial advice. Nothing what I say here should constitute an offer to sell or buy any securities. I'm simply providing this for entertainment and informational purposes. And I should also mention that you're looking at an early preview build, so it may be a little bit buggy, but we'll work through that and we'll polish it as we go. So I'm going to start by launching a program that will allow me to capture my voice and talk to the chatbot. And I'm going to, instead of giving it a huge long bio about who I am and what I'm looking for, I'm just going to give a very simple prompt. In this case, let's say I want to find companies that I could add to an income-themed portfolio, companies that pay dividends. So let's start. I'd like a portfolio of companies that have high dividend yield and would fit into an income generating portfolio. All right, so now it's basically transcribing what I discussed in my kind of audio interaction, and it's converting that into a prompt. It's launching the application. It's doing a search based on what I was looking for, and it's going to provide some ideas for me in the form of companies that offer a dividend. So here what we can see is we have been suggested a number of companies here that actually offer dividend. So a dividend is essentially an income stream. If you think about it like this, there are multiple types of income you can earn. The most common form of income is your earned income, which is the money you get paid for doing work. So you go to work, you have a job, you get paid, that's earned income. But there are other forms of income that you can earn, one of which is also or is called dividend income. So this is income that you get. It's essentially a cash flow that you get from holding these stocks. This is an early version, but what you can see on the company card here is the quarterly income that you can expect to receive for holding one share. So in the case of Realty Income Corporation, which is a REIT, a real estate investment trust, for every one share that you own of Realty Income Corporation, you can be expected to be paid out essentially 92 cents every quarter. And each company has their quarterly end in different months. So if you wanted to, you could go through and you could identify every month of the calendar which companies are issuing quarterly dividends, and you could create sort of a steady income stream every month by holding a portfolio of dividend stocks, income generating stocks. So the dividend itself is a percentage of the company's profits that it returns to the shareholder. So companies incentivize shareholders to hold their stock through different ways. Some are more hyper-growth companies. They want to increase the value of the company and increase the share price, and investors are encouraged to hold that stock for the appreciation in the share price itself, in that form of capital gain. The other kinds of companies, which are more income-oriented, whereby they will give back a percentage of the cash flow of that company, the net income, to the individual shareholders. And this also includes the employees as well, if they own shares in the company. But it also includes external shareholders as well. So there are different kinds of companies and stocks that you want to have in a well-diversified portfolio. And so in some part of your portfolio, you might want to have some growth. And in other parts of your portfolio, you may be looking for sort of income. And this also applies differently to different folks, depending on where you are in your time horizon. If you're later in life and you've made your money, your risk appetite is probably going to be a lot less than if you are just starting and you're looking to build your wealth for your retirement out 20, 30 years into the future. If you already have assets and you just want to preserve your assets, you're not looking to take a lot of risk, then you might be looking at sort of income preservation strategies or income generation strategies, in which case you might overweight on companies that are more stable. They don't have that high growth, maybe less volatility, but they provide a steady income stream in the form of a dividend payment. So there's different strategies that you might want to look into. In this case, I just wanted to explore dividends and why, exploring, searching for companies specifically based on their dividend or income potential can be one strategy. So what I'm going to do here is I'm going to add a bunch of these companies. As you can see from the sort of salmon coral colored badge here, you can see how much the expected quarterly dividend yield would be for holding that stock. It's still a work in progress, so we have to double check that these values or these figures are correct, but you should get a good idea of how much total income you can generate by holding a portfolio like this. One thing you'll notice about this portfolio is if you look at the performance, this portfolio has underperformed the benchmark. It's essentially flat with only a 1.309% increase since the beginning of this year. So that's so far it's underperformed the market from a price appreciation standpoint. But at the same time, you are here in this case you're optimizing more for the dividend, less so for the stock price appreciation. So one thing you want to do, let's do another search here. Search for dividend-paying companies. I just want to add some more companies into my search results so I can compare and contrast. And I'm using AI-powered search here to help me quickly scan and analyze all thousands and thousands of companies in the database to find high dividend yield companies. Here's what we notice. Some companies that are in growth sectors do also pay dividend. In the case of Apple, I think Microsoft as well. Yes, those companies pay dividends. But you also have your kind of more consumer staple companies who aren't necessarily high growers, but do still offer a dividend. So you can have a mix of, let's say, high growth and sort of stable income in a dividend portfolio. Those two aren't necessarily mutually exclusive. So I'm adding these companies into the overall portfolio. And as you'll notice, by adding some of these growth technology companies into my portfolio, the overall growth rate of the portfolio as a whole is still relatively flat and definitely underperforming the benchmark, which is to be expected, right? Again, this is optimizing for the the dividend yield. Now, one thing you can think about is for every $1 in stock price, how much dividend yield do I get? So in the case of an Omega healthcare investors, I'm getting 69 cents for every 32 a quarter for every share that I buy in Omega, which is currently trading at $32.37, right? Realty Income, I'm getting close to about $1 for a $53 stock. Main Street Capital Corporation, asset management company, I'm getting about $1 for about $50 in a stock. AT&T, you're getting about 28 cents for a $17 stock. So what you're looking here is just to kind of get a sense of the dividend yield. So what percent in dividend payment am I getting relative to the stock price? And that can kind of help you. I think this is a bug. I don't think Coca-Cola pays only 2 cents. That should probably be revised. I'll look into that. But what you're trying to do is, you're looking for companies. You want to understand how, if I buy and hold this company, just on the dividend appreciation, when will that purchase essentially be paid for? And for the most part, some of these companies, if you hold them for 20, 30, 40, 50, 60 years, you'll eventually get paid the money that you invested from your initial cost basis. So there's definitely reasons to hold these companies, especially if you are looking to kind of preserve your capital. And along the way, some of them do increase in their stock price value. So for example, Procter & Gamble, you're paying about $160 to get $1 in dividend income, but along the way, you are getting some level of stock price appreciation as well. So that's kind of attractive. Microsoft, if you're looking at it from a stock price to dividend yield perspective, there's a greater dispersion there. You're paying much higher price on a per share basis relative to the dividend yield, but your stock price appreciation is growing pretty substantially. It's one of the more stable growers in the market. In the case of Apple, you're getting a decent dividend yield. Most people own Apple as a core holding. They're not really trading it that much. So if you're a long-term investor, Apple may be a good balance, a good mix between growth and dividend income. You'll also notice that you have companies in staples and healthcare and communication services. So almost all of the telecom and wireless carriers will provide an income, a dividend payment as part of holding the stock. It's just part of that's kind of the strategy that these companies use, to sort of market their shares. They earn predictable cash flow. People pay their internet bills. They pay their mobile phone bill pretty consistently every month. So it is kind of a cash flow machine. Now, these telecom providers have to spend huge capex to, deploy the internet infrastructure all over the country, whether that's towers, data centers, fiber optic lines, and so forth. But over time, they pay for that investment through the predictable cash flows of their subscribers. And a portion of that cash flow that the subscribers are paying as revenue to the company gets returned back to the shareholders. So you can kind of look at these communication services companies like Verizon, AT&T, T-Mobile as cash flow generating machines. Not really going to increase their stock price very much, but they will provide predictable cash flows. That's a similar situation to some of these real estate investment trusts. So Realty Income owns real estate properties. I would imagine things like maybe apartment complexes and office buildings all across the country. And again, people pay their rent, they pay their lease. This kind of company essentially collects all all of this monthly revenue or monthly lease payments and rental payments across their portfolio of holdings and returns a portion of that to the shareholders. Omega Healthcare looks like it is similar, but it looks like it invests in nursing and assisted living facilities. So these are going to be specific types of buildings or residences, maybe things like hospitals, maybe like pharmaceutical labs, assisted living care, things that are zoned in that kind of area. They have a portfolio of those kinds of properties. Realty Income has its own kind of portfolio. And Main Street Capital Corporation looks like it is providing equity capital. It's an asset management company, and they also provide a dividend, probably because they have a portfolio of holdings whereby they generate collectively across all of their assets revenues, and you get a portion of that as a shareholder in the form of a dividend. So that is just a quick overview of the kind of company that you would be looking at in terms of dividend-oriented stocks, companies that pay dividends, they have stable income. Maybe they don't grow as fast as some of the high-growth sector companies, but they do provide steady cash flows. And again, depending on what your investment goal is, it might be a good move or a smart move for you to incorporate an income generating strategy or in form of these dividends, especially if you're more of a buy and hold person and you want the option of possibly getting some stock price appreciation in addition to the dividend yield. Yes, you could put your money in the bank, in a savings account, or in a money market fund and generate 2, 3, 4, 5% as one way to deploy your capital in mostly risk-free way. Another way is to go ahead and take on some risk in the form of companies, but understanding the kind of company that they are, looking at their financials and looking at their dividend yield and determining that you like the option of getting both the cash payment as well as potential stock price appreciation, and knowing that these payments compound over time. So you can essentially take that payment that you're getting and buy more shares in that company, right? Either fractional shares or whatever. Additionally, if you decide that you have a lump sum of money and you want to invest it in the market, but you still need some cash flow in the form of income to pay for some of your basic necessities, you might decide that you want an income-generating portfolio that can give you cash flow every month or every quarter, which you can then live off of. So it is a form of income. It's not earned income in this case. It's dividends. There's other forms of income as well. You could charge interest. You could give loans. You could charge interest. You could get paid royalties for licensing your art, your name, your image, your likeness. For example, you could get paid, you could sell properties, you could sell stocks in capital gains as a form of income. There's different forms of income, but dividend can be complementary to maybe your earned income. And if you're closer to retirement age and you're looking to supplement your pension or your retirement income with some other forms of income, dividends can be supplementary income for you. So if you do have retirement coming up in the next, let's say, 20 to 30 years, you might want to think about positioning yourself now for that time and building a position over time of cash flow generating companies who have shown consistent dividend growth over time, and adding that to a portfolio and hopefully compounding that over the long run, right? So that is just a quick demo I want to share for you guys. I hope you found it informative. two things I wanted to highlight here was, well, actually three things. One is the speech to text to action that we can integrate into our platform so that you can actually describe what you want and have the platform, the AI, basically translate that into actions, put that into action for you. That's one thing I wanted to share. I also wanted to share with you sort of the new dividend feature that we have, where you can kind of easily see the dividend yield for different companies directly on their underneath the stock price, to give you a sense of kind of like how much you're getting paid for owning a share in that. And finally, the just an overall concept behind, a income generating portfolio, more of a, dividend paying portfolio, and how that looks a little different from the high growth companies, but can still be very valuable, and over time can not only pay for itself, but also provide you money that you can reinvest and compound your growth. Or you can use this as a form of cash flow to help you in your kind of, as supplementary income in your life, right? I think people think of income as just the earned income. That's only one form of income. There's many forms of income. There's like 5, 6, or 7 different forms of income, in fact. And so this is one of the potential ways for you to earn additional income for your expenses, for your retirement, and so on. Hope you guys found that informative. And I'm excited to be able to launch these new features for you guys, which you will be able to try very soon. So if you haven't yet, go to Boltfolio.ai, sign up for a free account. You can do it with a single click. You can log in with Google or Microsoft account. You don't have to memorize any usernames or passwords. Or if you want to go with a username, that could be a good idea as well, because as we roll out more social features, you want to go ahead and reserve your preferred username on the platform now so that it's there for you. And yeah, really encourage you guys to keep checking out the site. We're growing it every week, adding new features and improving it to make it easier and to make it the fastest and easiest way to construct high quality, balanced, optimized long-term investment portfolios with generative AI. So that's it for today, guys. Have a great week ahead. Talk to you soon.